Hey, good afternoon, everybody. Good evening, actually. Well, maybe good afternoon for some folks. How we doing tonight? This is Rick talking. Glad to have you here this evening. Everyone doing okay? Hi, Joe. Glad to have you here. Appreciate it. Hello, SP. RT. Hey, Dan. It's glad to hear you're doing well. Sun is still out. Well, here, I'm afraid the sun's gone down. Kim, Ray, Ken, how are you guys doing? Glad to have you here. Hey, Thomas. Minus 12 in Ann Arbor. Oh my goodness. That's cold. That just makes me cold, and I'm standing in a very comfortable space right now. Minus 50. I know what minus 50 is, so I've been there. I've done that. I've done that a few years, actually. Okay. Again, I'm glad to see everyone here tonight. I appreciate it. You know, we truly know that you have other places you could be. And I have 4 little slides, and then we're going to look at some charts, okay? Tonight, the main topic is going to be about base hits. And so we're going to look at some charts, and I'm going to show you why, maybe some targets, things like that. You'll see. But we'll definitely, I've got some charts picked out, I think, that are looking pretty good. And we'll kind of see if we can work with them a little bit. So tonight, like I said, we're going to talk about base hits. And one question I want to ask everyone is, why do you want to trade? Why does anyone trade? And please feel free to type something out there. Why do you trade? Freedom, financial freedom. Okay. Thanks, Aaron. Anyone else? Maybe you trade for retirement to make money. Okay. We can do that. Beat the market. All right. Kind of a hobby, maybe. Beat the market. Increase the bottom line for freedom, enjoyment, independence. Want a new car. There you go. I like that. It beats 9 to 5. Way to go, Johnny. I like that one a lot. FIRE. I'm not sure. You have to help me with that one, Al. Fire. Yeah, have to help me with that. Supplement retirement income. Retirement again. So a lot of retirement. All right. And that's Walmart greeter. Actually someday I'm thinking about maybe doing that. That might be kind of fun. Really. Just greeting people. And it doesn't have to be at Walmart. It could be at anyone. Hello, Steve. How you doing there? Okay, thank you, Al. FIRE, financial independence, retirement early. Thanks a lot, everybody. To lose money first. Okay. Well, maybe we can help with that. Yeah. All right. And those are all some great answers. They really are. And I think that's one of the things that we have to establish first. Why do we want to make money? And I'm not going to get into it very much. I'm not going to get into it at all. How much money you should be making or want to, your end result. We can work on your end result a little bit, at a later time or something like that. But I do want to put something up here a little bit, just looking at base hits. Now, I know for a fact there are some folks in the room that have $1 million plus accounts. And I know for a fact there's folks in the room that have $1,000 and they're just starting out. So everybody's number is going to be a little bit different because it really depends on how much you trade with. For instance, somebody that has maybe a $1,000 account. Let's see, will this work? Yeah. If you have a $1,000 account, you are not going to make $1,250 a week. or $65,000 a year. It's not going to happen. I know you hear stories of people doing it, and I call BS on them every which way from Sunday. That's pretty hard to do. In fact, it's just pretty doggone amazing, in fact, to the point where you better have proof if you're going to believe it. Somebody that has a $1,000 account, you might even have a tiny bit of trouble doing this. You really might. But that is one of the powers of compounding your account is amazing. It is truly amazing. Somebody that has $1,000 in their account and you're striving for this right here, you can never take money out of your account till you grow it. It's just a fact. It's just a hard, cold fact. You can't do it. Because you can't grow it fast enough if you take money out of it. Of course, if you have, I don't know, maybe you have $50K in your account. If you need to take a little bit out from time to time, maybe you could do that. Maybe you could. And you know what? You can do this. And of course, you could do all of these. But you have to start somewhere. And that's the important thing. You have to start somewhere. And over time, it grows. Now, I think most people know here, I've been trading 31 years. And do you think I was successful the first year? No, I wasn't. No, I wasn't. Absolutely. In fact, I would dare for anyone to tell me that they were actually making money their first year in trading. I would not believe it, honesty. So it takes time. You have to work into this. You have to pay your dues. It's just a fact of life. So, hey, I have a PM here I want to answer. Yes, this is being recorded. In fact, what I would like to do here is I'm going to toss this out to you right now. And here's a link. It will be on the website, the recording, but it will also be posted on my YouTube channel tomorrow. So that'll get you to the YouTube channel. So anyway, I want you to know that this is very possible and what it can do for you. Can you imagine a second job perhaps, or you're trying to save money? I saw, you want to buy a car. Well, you know what? I don't know if $13,000 is going to buy you maybe the car you want, but if you could do this for 2 years, you could do it. I think you could buy a car for $26,000. I do. I would be hard pressed to ever pay more than that for a car. And that's all it takes a week. Now you're going to have losses. Don't get me wrong. It's not a piece of cake. You're going to have losses. So this is the net after losses is what I'm talking about. So we're looking for these to be the wins, and then the losses are out there on their own. But it's very doable. The thing about it is you have to learn to take profits to get there. And when you do that, I call that base hits, getting around the bases, like in baseball here. So we come over here, and in baseball, you've got to start here. Let me do this. You've got to start here, go all the way around the bases, and you have got to get back to the home plate before you score, before you make any money. Okay? All right. But we don't have to do that. We really do not have to do that. All we have to do is get to first base, and we make money. Second base, you make money. Third base, you make money. Now, everybody is a little different. How much is first base? I don't know. Is first base $100? I don't know. If you're one of those people that have $1,000 or even $5,000 or even $10,000 or even $15,000, you know what? Maybe first base is just $100. That's all. You do that 2.5 times a week, you profit 2.5 times a week that, now you've ended up with your $13,000. You do that, you make $500 a week, you end up with your $26,000, and so on and so on. So maybe second base is, I don't know, let's just say 250. So if you're in a position and it rises to $250, maybe that's second base. I don't know. You know, if you have $1 million account and you're trading with $1 million, maybe this, I don't know, maybe first base is $1,000. Maybe it's $2,000. Everybody's account is a little bit different. Just a little bit different. So what's your edge? What's your edge? I don't know. And everyone feel free to type something in if you want. I'm going to share with you what my edges are. And I said, because I knew I was going to be doing this tonight, so I started today just putting a couple of things together, and I started making some notes to myself. And here's some things that I think is my edge. My edge. I profit into strength. In other words, when I get to first, second, or third base, I try to take profits. I use the same basic strategy over and over and over and over. I don't try to go out and learn a bunch of stuff. I've tried that before and it doesn't work. I got to tell you that it's a killer because you can't keep up with everything. So just a couple strategies. You might tweak them slightly, but they're the same basic strategy. I use real-time alerts. This is one of the things that I started using quite a few years ago that helped me find the charts that were moving, because that is something that everyone has trouble with. That's why everybody wants stock picks. That's why everybody wants trade ideas, because they have trouble finding the trades. And a real-time alert scanner setup can do that. Now, you gotta excuse me, I'm gonna end up losing my voice before tonight's over. Weakness and strength. You probably are wrong. You probably think I'm talking about the market, like knowing what weakness is and knowing what strength is. And this is not at all what I'm talking about here. This right here is what I'm talking about, is knowing as a trader, my weaknesses and my strengths. What are my weaknesses and what are my strengths? What are your weaknesses and what are your strengths? Know what they are. Know what they are. And keep it simple. I was looking at a chart today that was way too crowded, helping somebody. It was way too crowded, way too busy. And there's no way you can see the chart through a bunch of stuff, indicators and stuff. Here's another thing too. Embrace losses. I see people every day, they take a loss and my God, you'd think that somebody took their cookie away. You know, if you have a loss, accept it, eat it up, take it. Don't beat yourself up. Don't stab yourself in the eye. Don't go hang yourself. Don't go drink the Kool-Aid. The world's not coming to an end. Now, if the losses are too big, that's because you didn't properly set the trade up. So that's where you simply have to work on that, all right? And this is the last slide I have, by the way. So these are what I think my strengths are. And I think all this plays into what we try to go over and cover most every day in our trades. And maybe I don't talk about, selling into strength using those words or the same basic strategy. Maybe we should. Maybe we should go back to this type of basic stuff. But I think if you put a plan together and you know what your edge is, and you take advantage of that edge, then I think it puts you in a better place to trade. So, okay, let's look at some charts real quick. And so, hey, what did Apple do? Let's go look at Apple real quick. So kind of looks like Apple is, hey, it's right about here. Okay. So Apple's about this area here. This is the first area that I have for resistance. I sat here right after the market and worked through a couple of these. Well, you'll see the charts we're going to look at. And I've got that area, the first area of resistance. And I hope everybody can see why. You know, we start running into where you see what maybe could have been support, but the sellers came in and knocked us below that, and that would be this candle right there. So that tells us that is resistance coming from the bottom, and that would be support coming from the top. So it looks like we're up here after hours with Apple. So that's kind of cool. That's good for the market, I think. I really do. So what we need to do is we need to get through this area, and we're going to need to test, or maybe we don't have to get through this area right away. But I think what we do need to do is, if anything, we test here, and then maybe we can come up. The next target I see will be about this area up here. And I'm looking at Apple not because I think it's a trade. I'm looking at Apple because it's a game changer in the market. It's a big dog, man. It is. I don't mean dog in a bad way. It's just a big dog. You know, this thing can make changes. If it missed earnings and it's down, then that's not going to be so good for the market. So if it holds up through the evening and traders, investors still like it tomorrow, then that would be very good for us. Another target I see up here is about this area right in here. So, all right. So with that, let's take a look at some trades here that I think, well, I can guarantee that maybe not every one of these will be on our watch list tomorrow, but there will certainly be the majority of on our watch list tomorrow. And I want to, speaking of our watch list, I want to show you this right here. Just kind of get in there. There we go. This is our home page. We have 3 blogs: Hit Run Candlesticks, the Top Gun Day Trading. By the way, this is me, Rick, with Hit Run Candlesticks. We have Top Gun Day Trading with Steve Risner, and over here we have Right Way Options with Doug Campbell. So, and there's posts in here pretty much every day, pretty much before the market opens. So if you want to go to those blogs, you can do that. I'm going to click on this blog right here, mine. And today, this is the blog post, and this right here. This is where you'll find the trade ideas that we have for the day. I had somebody ask me earlier today where to find the trade ideas, and I told them, and you know, there was a story there that they would like to have them in the evening because they really don't have time in the morning, and yada yada yada. Well, the thing of it is, you will find that I can actually never think of a time that I post a trade in the trade ideas that's so time sensitive that you have to have them the night before. I really don't. So what that means is you can come over here and look at the previous days and start a watch list with these, because the stocks I put in there, they're all trades that are all chart patterns that look like they have potential to go up in what I would call a short period of time. Short period of time might be within the next 30 days, maybe the next 20 days, maybe the next 10 days. I'll be honest with you, I can't predict if a stock is going to fly tomorrow. I can't predict that. When you find somebody that can, though, let me know, because I'm going to subscribe to them. All right. So it's all about. So anyway, there's the blog, and please, you know, I hope you come through and check out the blogs here. So what I want to do is, like a chart like Home Depot here, I want to put this on my watch list, and when I put it on my watch list, I end up putting it on one of the scanner windows like this right here, or I put it on my own personal scanner window, so charts that I'm currently in, long or short, and then if I see it pop up on, this happens to pop out of the box alert. If I start seeing it pop up on the pop out of the box, then I know to go look at it because it might be starting to move. And that's what I want to do. I want to be in charts that are starting to move. That's one of my edges, I believe, is having that alert system that says, hey, let's take a serious look at the chart. So if I start seeing, for instance, Home Depot move, the couple things I'm going to look for is, one, we've got a nice little flag brewing right here. We've got a nice little trend. You can see all that. So if I start to see Home Depot start to pop and it comes up on that scanner and, it kind of hits me in the forehead, then I'm going to look at buying that. And what I'm going to end up doing is, because I like to sell into strength, so what I try to do, and I've been trading options a lot lately because they are amazing. That's all I can say. I'm not going to talk anything about that tonight. They're amazing. I only trade directional options, nothing fancy, nothing like that at all. So what I'm going to do is buy maybe 2 contracts. All right. Now that's quite a bit on Home Depot, but still only 2 contracts. So what I'm going to do is I'm going to sell maybe right here, guaranteed right here, at least 1 contract, at least 1. So I'm going to sell into strength. So like I said, maybe 1. It depends the market and the price action. So right away, I'm putting money in the bank. And then what I'm going to do is I'll let this work as long as it works properly. In other words, if it wants to consolidate a little bit, okay. But what I don't want it to do is just to start coming back too hard. And the last thing I ever want to do is get it below where I took my profits, because once I collect those profits, I want to keep those profits. Ideally, it just sort of moves sideways a little bit, and then we follow through to that next target area where I may take that second piece off. Let's see, I just noticed I had a couple questions. I apologize for not getting to those. Say, what is the power line? Okay, the power line is excuse me. The power line is simply linear regression. And I just picked 150 days. You could put 200 days up, 125 days if you want, 100 days if you want. All that does is draw a straight line across there. That's all it does. And all I want to notice, if I ever notice anything on the volume, is I want to know when there's heavy volume breaking out of that line or coming very close to it. That's all I want to do right there. So that's all that is. I'm just taking volume and then I'm looking at the linear regression. 150 days puts a nice straight line there. James, how do you get to the... I apologize. Yeah, you simply just go to the website right here. And this is the Hit Run Candlesticks blog, Top Gun Day Trading, Right Way Options. We all 3 do different things and our blogs are very different. So just click on this and you'll see the trade ideas there. See, another question is how, okay, we did that. James, thank you, Malcolm. Top secret. Okay, let me tell you the story why I named this the power line. Because people that come to the webinars, that's what they want. They want the secret sauce. Let me tell you about stock trading. There is no secret sauce. There just isn't. So that is why I did that. So top secret, here a few weeks ago, maybe even past a month ago now, I was at my desk. It was about 2 o'clock in the morning. And I was playing around with indicators and different things. And that's where I accidentally stumbled on to the red-green or green-red trend line right here. You know, how do you do that in TC2000? So in my smart-assed way, I named it Top Secret so everybody would ask, what's that? So when everyone started asking about it, that's when we started to talk about it. The point I'm trying to make is there's no secret sauce. There is no top secret anything. It's not. All this is, it's the volatility stop wrapped around. This one happens to be wrapped around the 17 exponential moving average. Yeah, trendicator. You can call it trendicator. Yeah, that would be a good thing. I don't know. I tend to call it the red-green trend, but trendicator is good. I like that. So anyway, that I named it top secret so people would ask, and sure enough, a lot of people ask. So thank you, by the way. I appreciate it. So anyway, okay, we just talked about Home Depot. What I would look for is a stop on Home Depot. And here's something I haven't said in a long, long time. And today we were talking about it, and I said it. Stops are kind of tricky in this. They're tricky because I think a lot of people try to trade with stops, and that is the wrong thing to do. That's just flat wrong to do that. So the thing I want to do is I want to ask myself, why do I like this chart? Why do I like it? Well, I happen to like it because it ran up, it consolidated, it broke out, and it came back and tested. So I'm going to put a line right there because that tells me that I'm okay with that. I like that. Now, because it's been moving sideways and because it's been trending up, I may very likely move this up a little higher. See where you have these touches? I'm going to throw that one out. 1, 2, 3, 4 touches. So I like this chart all the way back here. We rallied up right in here. I wished I was in it. It started to pull back, so that's when I like the chart. And now that it's been going sideways, I like the chart all the way through there. So what I'm going to like about this chart is the fact it's moving sideways in this box, just like that. So once you know why you like the chart, now you have the answer of why wouldn't you like the chart. So if you like the chart because it's holding above that low, then obviously you would not like the chart if it came back below those lows or that line, correct? So where should your stop be? Well, as far as I'm concerned, that's where my stop should be. I don't look at stops as protecting 1, 2, 3, 4, 5%. If I buy the chart in here, say I buy the chart at 179.56, this is the stop of the chart whether you like it or not. I mean, it's where support is, whether you like it or not. If you put a stop, if you say, well, geez, I only want to risk right here, you're just asking to get poked in the eye. I mean, you're just begging to get poked in the eye. Stops are not meant to trade with. Stops are meant for disaster. If we get below that line, that would be disaster for me. So, and also too, I wouldn't put it like tight up against any lows. I would drop it down below some of those lows, like that right in there. Now, if you happen to buy the stock up higher, for instance, if you wait for a breakout, okay, why do you like the stock? Because it broke out, right? Well, then you might come in here and tighten that up just a little bit. You might look at that kind of 50% mark between those areas right in here. Another thing you might look at is volatility stop. You might look at that volatility stop and see that's right where my original support was. And that's the thing about a volatility stop. If you have a stock moving sideways and it taps the bottom several times, you can almost bet that volatility stop will be in there. So let's take a look at Nike. Let's see here. For the past 2 days, I got stopped out of several similar setups. And Olga, you have to keep in mind what the market has been doing, okay? And in fact, I'm gonna show you a chart here. I didn't get stopped out. I stopped myself out. But this shows what the market has been doing. The market is very afraid. I mean, we all should be very, very concerned. You've got all kinds of political stuff. You've got FOMC stuff started today. You've got earnings coming out. I mean, major earnings this week coming out. And you know, I'm not seeing any earnings that are stellar. I'm not seeing any earnings that gets a great big blue ribbon. So it should make everybody a little concerned. So here's what's happening, Olga. Prices start moving up and people are taking profits right away. That's what I'm seeing. Now, the reason I showed you Roku, because I made a huge mistake on Roku today, and I don't mind sharing it. I share everything I do. And what I did was I was up about 300, I forget now, say 320, okay? I forget the exact amount, but it was 3 something. Did I follow my plan completely? No, I did not. Should I have taken a first base hit, second base off the table? No, I did not. You know what I did? I sat here and watched this silly thing come all the way back down to the point where I ended up closing myself out with an $85 loss. All right? I'm pointing this out to show you what traders in the market are doing right now. So I don't want you to beat yourself up. What I want you to do is realize that it happens to a lot of people. And so now you can put that on your strength and weakness list. And what I mean by that is when the market is in such shambles, and right now I think it's in shambles, that means maybe you might need to set in cash for a few days until the market straightens out. Because this is where the retail trader gets chewed up. Things like this right here. I got chewed up today on this one. I mean, I should have had at least $150 profit, taking half the position off. But I didn't do that. And I got chewed up, ended up having to take an $85 loss. So this is one of those strengths and weaknesses. Know your strengths, know your weaknesses, and maybe this type of market could be a weakness for you. I don't mean that in a bad way. We have to accept it. We just have to accept that. So anyway, thanks for that question there. Here, let's get going. And we're going to Nike. Let's take a look at Nike. Remember when I said there's only a few chart patterns I actually trade? And I think that's a key to success. I don't try to learn everything. Believe me, I don't. In fact, I go out of my way not to learn some things. And one of the chart patterns I like, I just absolutely love it, is when it goes up and then goes sideways. When it goes up and goes sideways. And it's the first up move. I never go after that. I really don't. I don't chase that first move. I start chasing. I start stalking. I start watching when we start that sideways move. And by the way, sideways can also be down just a little bit. I'm looking for a stock to rest or pull back. 1 second. I'm going to grab some water. Okay, let's try that now. So I'm looking at Nike here. A couple little targets that I like on Nike right now. And of course, if we break out of 85, man, this could be a $100 stock in no time at all. I also want to look at things like, how did we get there? Well, here's how we got there. We started moving down, and then we put in a bottom and started moving up. When we started putting this bottom in, I can do things like draw the inverted head and shoulders. Inverted head and shoulders is a very nice bottoming construction chart pattern. This is a very, very good one. I'm sorry. I had the flu a week and a half ago, so still a little in my chest. So anyway, so here's Nike, and what I'm looking for at Nike is if actually if we didn't have the FOMC meeting starting today, and if we didn't have so much doggone earnings this week, and if Apple was not reporting tonight, I would have bought this today, all honest. I really would have. It took every ounce of strength for me not to buy this today. So what I'll be shopping for now that Apple is sort of out of the way, and I'm happy with the results. We'll see if the rest of the world is happy with the results. So what I'm going to look to do is perhaps I can get this tomorrow in this area. Where do you think my stop is going to be? Right in this area here. Actually, I'm going to draw that a little bit lower, probably like this right here. So maybe I get it here, or maybe I wait for a breakout. I can't say because I don't know exactly where even it's going to open up tomorrow. So, but that's what I'm looking at. So buy in here, buy here. I'm looking for these possible targets, a test, and possibly higher on Nike. Let's see here. Is it Darren? Rick, you never use Bollinger Bands. No, I don't. Like how Caterpillar in earnings was above the volatility dots, but was losing volatility from the upper band, and then it dropped. No, I don't use Bollinger Bands. I don't find them useful at all, honestly. I don't. So maybe another day we can talk about that, but I don't find them useful. That doesn't mean they're not useful for somebody. Okay. I mean, they're very, very popular. I personally just don't find any use to them. Let's see, Olga, and thank you. Is that? I'm sorry if I pronounce it right. Darren, maybe. Olga, what strike price do you usually buy? This is it in a nutshell. And by the way, there's a couple of videos. I think my recent video, the one that's on YouTube, if you go take a look at that, Olga, that explains it very well. But I look for 70, plus or minus, I don't know, we'll just put 5 in there, of around 70. The strike price is whatever works there. And then I want open interest to be at least 10 times, maybe a little bit more of what I'm trading. So a combination. So where's the strike price? Wherever it wants to go. I mean, I don't know. Which strike price is this going to fit in? And then that's what I buy. And then I usually, like everything I have now is almost out to March. So, I'm looking. Look, I'll take one that's 20 days out. I don't, if I have a reason, I'll take it 20 days out. But generally, I'm looking around 50 plus. So something like that. VLO. Let's see. Yes. Awesome. Okay. Great. Let's see. Dave T. So can get with Doug to learn. I highly recommend. I'm not going to teach you options. I can teach you how to look at a chart. I can do things like that, but I'm not going to teach you options. I started trading options a year ago, and my coach was Doug. And I'm not even going to begin to teach any kind of options. That's not what I'm going to do. I'm going to send you to Doug. He's the man for that. So I highly recommend you check out Doug and Right Way Options if you're interested in options. But he is my personal coach for trading options. VLO. This is another one of my favorite chart patterns. And notice it's the same thing we've been looking at, right? It's up and sideways. That's it. I truly think this is one of the best chart patterns you can look at. And the strategy is always the same. The strategy is always, I want to buy inside that box, or I want to buy on a breakout just above the first box, right there. I'm not very interested at all at catching bottoms. I'm just not into that. I learned some time ago that's not what makes you money, and that's not what makes your trades work out. In fact, probably just the opposite, tell you the truth. So that is it. Now, here's a particular strategy that VLO is in. We're going to go to a different chart to show you that. And this is called a rounded bottom breakout, the RBB strategy. And the RBB strategy, we don't have time to talk about it in depth tonight, but it's basically a stock that's been in a downtrend. You want the 50-day simple moving average, which is the blue line, below the 200 moving average, which is the red line. So red line, blue line right there, okay? And then what we're looking for is a reversal pattern. You want to be able to look for that bottoming, that constructed bottom pattern down here. You just don't want it just a whiz-bang pop up there for no reason. So this is a nice constructed bottom here. We've moved up to the 50. We tested the 50 just like it's supposed to, right there. And then we popped up a little bit, just like we're supposed to. We broke out, and now we're testing, just like we're supposed to. Now we're consolidating sideways. So this whole chart pattern in this area, right here, I'm finding is bullish. Your choice is, you could buy it in here, or you could wait for the breakout. Either way, the upside doesn't change. I mean, the targets are still going to, they're not going to move because you bought it here or here. The targets aren't going to move. Targets are still the same. So, sure, somebody that bought it down here maybe makes more money at that first target. But I promise you, I would ask somebody to prove me wrong. And I don't think you can. But if you're the trader that buys it right here, you're the trader that's selling everything the second it breaks out. That's what early buyers do. They're trained to do that. They've trained themselves to be so quick, get in, get out. And the truth is, the majority of those do not actually make a living. What they do is they trade money. And if they're lucky, they end up at the end of the month with a few dollars left over. So the real money is when you trade a chart pattern like it's supposed to be traded, and it breaks out, and then you take partial profits, sell some into strength. So buy enough so you can sell some into strength, collect that money. Now you could be playing with the bank's money at this point. Now you manage the chart on the way up. Let's see, do I have any questions? What is the gold moving average? Gold. That's the 34 EMA. Thanks, Al. Appreciate it. I just saw that. DVN. DVN is another rounded bottom breakout trade because it has been in a downtrend and because it has broken out over the 50-day simple moving average. Notice the sideways consolidation that we have right here. Notice the sideways consolidation we had right here. That's a beautiful chart. Here's a chart that rallies up, consolidates, breaks out, consolidates, and it's testing this breakout area. That's exactly what we want to happen. Breakout, test, breakout, test, breakout, test, breakout. That's what we want to happen. Now, I know some people are saying that you probably, here's a perfect world for you. You want this thing to go like this and just go up and up and up and up and up and up and up. And you know what? In your trading career, you will probably catch a trade that does that a couple of times. That is not the norm. That is not the norm. So when you hear people talking about it, please, please believe me when I tell you that is not the norm. This could be the norm right here for a bullish chart. There could be a moon planetary alignment. Could be. EBIX, we had a trader in our trading room that went long this today, and they pointed out, and it's most likely going to be on the watch list tomorrow. This is a very nice chart here, and it's just now broken out. It's broken out. Here's a run, and it pulled back, and now it's breaking out. So what I'm going to be looking for is an inside day. I like inside days after a breakout. An inside day is simply when the price, say tomorrow's price maybe, is in to the right of the breakout candle. Let me talk really quick about inside days. So why do we like this chart? We like this chart because it's been trending and it broke out, right? We all know that stocks that break out tend to run higher. All right, so it breaks out. Now I mentioned an inside day, and this is the candle right here is the reason we like it. So maybe tomorrow, I can't guarantee that it's going to be an inside day like that, but we're just going to put that in there. What if it doesn't do anything? It just does a candle that looks like that right there. And let's see, tomorrow is Wednesday. Then Thursday, what if it does this? This is an inside day because this is the candle I'm looking at. This is the candle of why I like it. That's an inside day of the candle that broke out. May not be an inside day of tomorrow's candle, but it is an inside day of the candle that broke out. We could do this all day long if we want. I would consider every one of those an inside day. Okay? Now I might buy it in here, or I might wait till it actually breaks out. Here's another scenario. Say you buy it in here. This might be one of those cases where I buy, let's see, maybe we'll just say one contract. All right? Or if you're just buying the stock, maybe you only buy, I don't know, 100 shares. Okay? When it breaks out and it proves that it can hold this top, I might add another contract. Or if I was buying the stock, I might add another 100 shares. So that's how I might handle that. Let's see, Rick, what if the breakout is a gap up? Most likely, Rick, I do pass on it. Most likely I do. I can certainly trade gaps, but that is not where I make most of my money. So if this stock gaps up tomorrow, nothing I can do about it. I won't be with it. Let's take a look at Apple as an example. Apple is gapping up as of right now, right? So tomorrow, the odds of me buying this would be slim to none. Very slim to none. On the other hand, if Apple did this right here over the next several days, so it gaps up and it gets up here and it consolidates. So it does this right here. So as of right now, we can see that Apple is gapping up. Now, we don't know what it's going to be like in the morning or anytime the rest of tomorrow, but right now we can see it's gapping up. So if I see it gap up anywhere in here and it pulls back and tests, now it has my interest. Now it does. And that's where I'm likely to buy it. But the gap up tomorrow, slim to none for me personally. Slim to none. Steve there with Top Gun Day Trading, he might trade that tomorrow, day trade. Here's RTN. RTN is another nice chart. Now, RTN I think has run a little bit high. I wouldn't chase it. So really what I would be wanting on this is to come back into this area here. That's what I'd like to see. Or I can even go up here. If price was to show me some consolidation, and it doesn't have to be, I mean, it can be, above this candle here. But if it shows me a little bit of rest, then I would be interested in buying it. And if it does that, look at the chart pattern we've drawn here. Nice little J hook or continuation pattern is what we've drawn. And again, this is my favorite chart setup. And it doesn't have to be a tight little box like the pop out of the box. It can have a pullback. And I mean, look at these here. See how we broke out and see that pullback? And we broke out and see that pullback? We broke out. So that's what I'm looking for, those type of moves right here. This whole move right here was very nice. Consolidated very well. Should have bought this. Boom, we're up. But we didn't. Here's another very nice chart, Goldman Sachs. Now, some of these charts for some folks here, they might be too expensive. I'll tell you what, well, the next one we look at will be a $6 stock. We'll look at that because I know some people can't trade the expensive stocks. I get it. I used to be there. But all you have to do is have the scans to find these. For those with the scanner, you can set it up so you only look for stocks that meet your price criteria. So see how we've popped up here where that rounded bottom breakout? Here's the 50-day simple, the 200 simple up here. See how we've broken out and now we're moving sideways, and we have this consolidation right here. So might want to just put that little box in there to help me out, remind me. Might buy some here, might buy some on this breakout. See, somebody asked a question. Yeah, the dotted deuce right here. It's a front weighted. Here's the TC2000. If you have TC2000, all this makes sense to you here. The 200 period moving average, the average type is front weighted, and the average of the low versus the last price. So real easy to set up. Let's see here. Do you like SLOB? I'm just going to look at how because I'm not sure what that other one is. Slob? Well, we'll look at it maybe. I like the way it's setting up. Yes, but it is not a buy. It is not a buy right now. I want to buy at least when I see buyers coming in. For instance, I could see maybe buying it here. Yeah, you'd be back down to the price, but what I want to do is I just don't want to buy on in my case, a black candle. It might be a red candle in your case. I don't want to buy on a down candle. I want to wait till the buyers come in. So I need to see some buyers in there. But the overall chart setup, I do like it. I do like it a lot. It's doing exactly what it should be doing. This area right here, it's not quite as tight as this one is, but it's still doing the same thing. Just not quite as tight. Hey, before we get too late here, one thing I do want to mention, the scanner, we're going to end the 30-day trial for $30. And that ends Thursday night. And if anybody would like to take advantage of trying out for a month for only $30, please take advantage of it. Starting Friday morning or sometime Thursday night, I suspect, it's $97 a month. And that's what it's going to be. So if you're interested, Ed, thank you very much, Ed. Take advantage of the discount. Tomorrow we have some classes we're going to run on it. And I'll be glad to talk with you one-on-one. Ed will be glad to talk with you. Doug will talk with you. Help you set it up if you need one-on-one time. So not a problem. Good question, Kim. How did you come up with the front weighted? Well, maybe you're asking, how did I do it here? Maybe I better go back to that. So the average type, simple, front weighted, or exponential. I just put on front weighted. What I did is I probably played with this and tested it for over a year, playing around. And I had a few others up there. I had spaghetti on my chart for a while. And I finally decided this was the one I was going to use. And I love it myself. I truly, truly love it. And intraday, these two moving averages are the main moving averages on my chart. intraday. Those are the ones I look at. So, okay, I said the next chart we'd look at would be a little $6 chart, Snap. Snap has come in here and put in a nice little bottom. Let's draw a line basically like this right here. And then we've got an inverted head and shoulders. That's what's going on here with Snap. We could actually even draw a line like that right there if we wanted. So as far as I'm concerned, we have a well-constructed bottom. And now price has broken out over the 50, and it's broken out over some resistance here as well. Now, I don't know if I'm keen on buying Snap inside here. I think I'm more keen on buying Snap on a breakout and a test. So, you know, I'm looking for an entry probably above that somewhere around 650, I guess. That would be a pretty good area maybe. 650, 660 perhaps. And then targets I'm looking for are about the $7.25, $8, $9, $9.80, somewhere in there. And I've simply, as far as the price targets, it's pretty simple. You're just going to go where price has been before. That's all you're going to do. Right here, a little gap. That would be a place to look at. Right here, where price moves sideways, right there. And then right here, where price has had a bull-bear argument right in here. So that's how I get to the targets. So, but for Snap, I'm thinking a breakout and test might be the best approach to this one, because it's got a little bit of craziness on the chart right here. So I want to make sure it actually can get up there. APA was actually one of our watch list charts today. And here it is, another one of those rounded bottom breakout charts. And here we are in that chart pattern that just works. It just simply works. We rally up, move sideways. Again, it doesn't mean this is the best way to do it. It's just what I have found is I almost never chase that run right there. I almost never chase stocks that are on the bottom here. I say almost because there are times that I've done that, especially recently with the market pullback, okay? But generally speaking, I'm looking for a run and rest. Want to buy in the rest or on the breakout test maybe. Targets 35, 37, 30, 40, 40, give or take. No, Bonnie, I don't look at a charts float. It's just not something I take in consideration. When I'm trading, what I look at is the candle patterns and the trend that it's in. That's what I'm looking at. So I'm a big believer that a stock that's in a trend will stay in a trend till it's no longer in a trend. And while it's in that trend, it will make consolidation areas. And those consolidation areas are what I'm going to look for. Now, when price breaks down through the trend, I'm no longer interested in it for a long. So I may look for a short, and it would be the same thing. I would still look for those consolidation areas as it moves down. Same thing. So Jay wants me to look at Facebook here, and I don't see a buy on Facebook. A couple of things. The chart pattern is holding. I'm okay with the chart pattern, but a couple of things I'm not okay with. One, there's no reason to be buying on a dark candle like that. There's just, I can't think of any reason whatsoever to buy on a candle that looks like that, because how do you know it's not going to move lower? So if you did, you're buying it, literally a gamble is what you're doing. So I don't see a buy right now. I do see a chart that is trying very hard to work out. Okay, that I do see. We have a bottom. We've rallied up. We have broken out of some resistance. So I think that is good for Facebook. Good job, Facebook. Way to go. As far as an entry goes, though, I probably wouldn't place an entry on it until it broke out not only of that downtrend line, and probably the line that is going to mean the most to me is straighten that line out and then put it right here. And what I'm looking at is the fact that these three bars couldn't get across, and the fact that those bars right there are having trouble on the other side of that little doji breakout there. So above this area here, whatever that is, 148 and change, 150 and change, that's right now what I would look at based on the chart that I see. That right now is what I'm looking at for an entry. Targets, one thing I'm always going to do is start with this, and then I'm going to look over to the left, and I think it lines up perfect, so I'm going to go with it. There's almost always a target between the two, and then I always start with the 200, and then I'll look to the left, and then I'll find price, which I'm pretty happy with it right here. I would go above the 200, go with price. So that would be the targets I'd be looking at right now. Let's see, how about USO? USO is in one of those chart patterns that I love, and it's in a strategy that I love as well. So right away, right from the get-go, I like the chart on USO. So what I'm going to do is draw a line right here, because I think it's important for us all to recognize and draw lines there and little faces at where we see chart patterns, and I see an inverted head and shoulders. I see this moving sideways right now, and I see it having trouble right there. So ideally, we might want to wait for a breakout and a test and buyers. So there might be another box right there. So that might be what we're looking for an entry on USO. JT, I don't personally use daily pivots, but I think they do work. It's just not something I chase. But pivot lines, pivot marks do work. I do like those. I used to actually have them on a chart, another chart on another monitor, but I've just gotten to where I don't. I actually use the volatility stop a lot more now, and then use price targets rather than the pivots. But I think they're reasonably well. They work, yeah. Let's see here. So if Facebook low comes on the 50 and holds and moves back up past a pivot, will that be your entry? My entry on Facebook would be right here, above 149.50. Simple as that. This is some resistance in here, so that's where my entry would be on Facebook. Other people, you know, this may come down, and I'm not saying my way is the right way. If you're making money, here's the thing with stock trading. There are hundreds and hundreds of ways to clean this fish. There really is. Or maybe I should just say catch this fish. Well, there is a wrong way. There is a wrong way. And if you're not making money, you're doing it the wrong way. If you're making money, you're doing it the right way. It may be different than my way. It may be different than Bill's way or Steve's way or Ed's way. But if you're making money, you're doing it the right way. If you're not making money, you're simply doing it the wrong way. So if this Facebook moves down and starts bouncing off the 50, and if you see that as a good trade, then by all means take the trade. But you've got to be able to argue your trade, not because you just want Facebook, which A lot of people do that with some of these cult stocks like this. You just think you're catching some bottom. But I got to tell you, until we get through this area right here, I'd be nervous. And then that area right there just makes this area stand out. I'd be very nervous until we got above that area there. And here's the thing. If somebody buys Facebook down here, and I buy Facebook here, I'll make you a steak dinner bet we make the same amount of money. I'll make you a steak dinner bet we make the same money. And we can use the same targets. We'll make the same money. I know it sounds crazy, but you'll see what I mean. And by the way, I like good steak, so I expect you would like good steak. Okay. Let's see. USO looked like a pretty small candle vertically. Does that mean anything to you, or just relative in price? Yeah, it doesn't. I'm looking for a trend. You have a trend. Small body, big bodies, doesn't matter. I'm looking for a trend. I'm looking for a chart pattern that says we have a constructed bottom. The inverted head and shoulders say that. I'm looking for a chart that has consolidation. USO certainly has consolidation. From that point there, it might go on my watch list for a real serious buy. Depending on how the market acts, depending on how the price action might act, I might buy it here or some in there, or I might wait for it to break out. What will not change is the target areas. The target areas will not change. So no matter where I buy it, my targets are going to be the same. Right in there. Okay. So, okay, let's see here. Do you wait for any new trades until after the announcement of Fed's Day? I mean, more than likely, I'll buy something tomorrow or short something tomorrow, depending on what tomorrow is. How the market looks. I'm not necessarily going to wait for any kind of announcement. We'll see how the market acts. Let me answer that question in a different way as well. Yes, please, Ed. Thank you. Yes, now. Thanks. Here's the thing. You could ask the same question about earnings. Do you trade through earnings? And here's my answer. My answer on both of those are going to be the same, exactly the same. So the question was, do you wait for Fed announcement tomorrow, before you buy anything? And again, my answer is exactly the same for into earnings. Here's the thing about it, okay? If you're a new trader, brand new trader, or a struggling trader, you need to stay clear from earnings, and you need to stay clear from days like tomorrow, even after any Fed announcement tomorrow, because the market will, it might go crazy for a while. Market might get really nutso. It may take a couple of days to straighten out. If you are a money-making trader, then you have some experience, because if you're a money-making trader, you've been doing this long enough. New traders don't make money. Sorry to tell you this, but you don't make money. And like I said, a trader that's making money has the experience and can play with things like this. For instance, here's what a new trader might do. If they buy a position for $1,000 and the stock has earnings in a day or two, or there's a Fed announcement, they might only spend $300 on that position. An experienced trader will do that. A struggling trader or a brand new trader doesn't have the God-given sense to do that yet. You haven't learned yet to do that. Again, I'm sorry to say it that way, but it is the truth. It is the truth. You know how many years that I didn't have the God-given sense to do something as simple as that? Oh my gosh, crazy. That's what experienced traders will do. Experienced traders don't go in with the full boatload. They lower it down. Experienced traders under those conditions, or maybe like the market right now is ratty, horrible, I think, tough conditions. This experienced trader will take profits quicker. The rookie or the struggling trader looks at a chart like this and says, oh my God, I just hit a home run. Yeah, baby, go. And then they sell it down here. That's the difference between struggling and a new trader and a successful trader. Bottom line, if you're a good trader, trade to your heart's content tomorrow. Trade all day long if you want. If you're an experienced trader, trade through whatever earnings you want to do. You've been there. You know what happens. If you are not one of those, if you're not an experienced trader, I think it's probably best to set out. So that is one of the, I could put that in a strength for me, knowing that. I would call that a strength for me. So, okay, let's see. Ed drew me a line. Thank you very much, Ed. Ed, thanks for helping Olga with the scanner there. Again, anyone else that is interested in it, remember the 30 bucks goes away Thursday night. So anyway, if you're interested, and we'll also do the one-on-one coaching if you need to do so. All righty. Again, everyone, tomorrow we'll have this posted. It'll be posted on the website. It'll also be posted on my YouTube channel. And here's the link right here to get you there. So that's a really quick strand. Do you wait for the consolidation to come closer to trend? Consolidation just by nature comes closer to trend. So yes, I do. Here's what I'll do, and then I'm going to close it out with this right here. I love this red-green trend chart. I love it. I'm really liking it. And here's how I would draw the trend line on this, and I'm going to clear all this off. Here's a case where I'll start the trend down here, but I'll run it up to that last dot. So as price moves closer, it's moving closer to the trend. And even if this was the last dot, I would do the same thing. So this maybe is the last dot. As we move closer, see how we get into that trend? Now, if I buy it and see how we're down here, I'm probably not going to sell this because we're still above what I'm using as a major trend line for me, which is the fact we're still in those green dots right there. Let's go look at just a different chart real quick. Look at another one. Here, let's look at SCHW. I think that's a beautiful chart. So what I'm going to do is I'm going to start down here and I'm going to run right up that green dotted line like that. And I'm going to put it right there and watch price. Now, price does not have to come right to that line for me. I'm using this. So if you may draw a trend line like this using price. Well, now it's on that trend line. What I do, I like to draw it like this because I'm not afraid to buy it today or tomorrow. It doesn't have to touch that to me because I've got the chart pattern set up. If I see it, I could buy it any day in here and be okay with it or on that breakout. So I'm just showing what I'm doing there. But I mean, you could draw the trend line. There we go. Using price touches, and we're right there right now. And even if we moved to the other side, that would still be a very nice chart because my number one is going to be the fact we're supporting. As long as we're above that support, that's what I'm looking for. Okay, I've got to run off, guys. JT, in your service, do you always give entry stops and targets? In the trading room, I always talk about a trade that I'm buying. And certainly, I mean, if somebody asks, I'll tell them. But generally what I say is, hey, look, I'm buying this, that, or the other thing. And we can certainly talk about it. But yeah, I don't mind at all. So, all right, guys, I got to go. My voice, I'm barely hanging on here. All right. Good night, everyone. Be safe. Sleep well tonight. We'll see you in the morning, bright and early. Thank you very, very much for being here.